Hello guys, you're welcome to my channel once again. If you are new, please do subscribe, share my videos. If you have any comment, drop it at the comment section. All right, then don't forget to activate the bell so that once I make new videos, you'll be the first to be notified. So without wasting much time, uh, on Friday last week, market ends here. All right, it closed bearish. I'm on daily chart. It closed bearish. All right. Then when market opens on the second, which is on Monday night, you see, because I told us that when market opens, this place is a support level. If it holds, that means there will be a reaction here. All right. That happens, and you see price pushing back to this resistance level 1.11000. So watch out, guys. Whatever happens in between here, you always see a formation that will tell you the direction where the price wants to go. As a retail trader, we don't have the force, the power to tell the market where it should go. The only people, the only body that has the power, financial capability to direct or to redirect the direction of price are what the institutional body, the banks, and all that. So we watch price to tell you where it wants to go. And when we see a clear formation of our strategy, entry strategy, then we press the button. Guys, here is a psychological level and it's a resistance level. It's an obstacle for this movement. The downside, the support side, this guy here, 1.10500, is a support level, and that shows that it's an obstacle for this price to come down. Now, when this place head, you now see that it's pushing upward. So if it gets to this place and this place also holds, there will be a reaction to tell us where the price will go next. But when you scale down, you see the better picture. You now see, all right, you see how it's going is bullish. All right, where is the obstacle? This point I just showed us here, 1.11000. All right, a psychological level. And the support level is 1.10500. You can look at it. A resistance is now become a support level. So these are the analysis I did share with us on pre-market before the market opens on Sunday. All right. So having said all this, what we should now be watching out for is for us now to be very patient. Now you cannot scale down to your time frame where you do your execution. If it is 15 minutes, 5 minutes, then you will now see clearly that price has been bullish all along. All right, let's imagine this morning you wake up, I don't know, maybe you are trading and I don't know the kind of section that resonate with your own personal activities. If it is the London session, the New York session, whatever, if you had entered from here since morning, you discover that price has been up, bullish, bullish, bullish all along. All right. The only way to establish that is for you to go to daily because you are an intraday trader. I recommend you go to your daily time frame, look for the directional bias. Okay. Look, once you see that the candlestick is bearish, that means you are going to be doing what we call sell to buy. All right. If it is bullish, all right, if it is bullish, what you need to be doing is buy to sell. It's very simple, guys. Don't complicate things. All right, make it simple. Don't complicate things like that. If you are a beginner, okay, I will understand. But if you have been trading, please make it simple. You don't need to even to do top-down analysis. Just 3 5 minutes, you are done. You don't need to uh, kill yourself and get what we call analysis paralysis. It could be very dangerous. All right, enough of all this. Another point is watch out, guys. Tomorrow, if you the pair that you trade, if the quote currency or base currency, if it has maybe USD, all right. If the base currency is is USD or the quote currency of your peer is USD, please tomorrow there's a news PMI and ISM. Please watch out. All right. And if you want to know the influence or the impact that may have after the news is released, please go to my channel. I've already made video. I've explained, I broke everything down for us to understand, for us to get the understanding. Today, being 3rd of September, there's a topic I titled Trading Strategy Steps, all right, slash tips for you to be successful as a trader. Number one thing you should need to have is patience, all right? Patience is the key, all right? Patience pays the bill. Patience pays the bill. Patience pays the bill. In anything you do, you must learn to be patient. Don't be in a hurry to jump into any trade. All right? If you see a clear direction and you see an opportunity, please be patient. Watch out. Pay attention to every details before you press that button. It's very key. Wait for clear confirmation before entering a trade. It's very straightforward and it's very clear. The second point is discipline. Discipline. All right. By being disciplined, meaning that you stick to your trading plan and risk management rules anytime, any day. My trading plans. A day I take 2 trades. I don't take more than 2 trades. Even sometimes I take one. No matter the opportunities that I see, I don't take more than 2 trades. So it's one of my trading plan. And when I want to get into a trade, if it cannot give me 2 to 1 risk reward ratio, meaning that when my analysis is wrong, I will only lose one. When my analysis is right, I will win twice. All right? Let's say, for example, when you are wrong, you lose $10. Let me just use that one. $10, £10, €10. But when you win $20, €20 or £20. So that is 2 to 1. So I hope it's very, very clear. You know, and adaptability. Be ready to adjust your strategy based on market condition because market has its own condition. There are changes as price action keep printing. All right? Because anytime price action gets to a support or a resistance level, there's always a reaction. Anything could just happen. So if there's a change, you adjust your own plan to that. By so doing, you will adapt to market condition. All right. Then signs to watch out for when trend is about to change, because if you are bullish all along, if you are bullish all along, it will get to a point, all right, It will get to a point, excuse me, it will get to a point that price action will tell you that it's time for trend to change. So there will be a sign for you to know that trend is about to change. Let's say, for example, this has been bearish all along to this point. All right. And price got here. Look at what he did. He came down, he got a rejection, he went up. All right. He came down, he pulled down below this level, he got a rejection, then he broke the structure up, then he started making movement to the upside. All right. Work with me, guys. So, in case of an uptrend to downtrend, uptrend to downtrend, all right, uptrend, now the trend will now want to come down. So, what usually happen, guys? This is an uptrend, then price is coming down. What usually happen? Let me show us, guys. Price action will form a swing low. After it has formed a swing low, it will follow by a swing high. When a swing high is formed, or you say a pullback, then a break of structure to the downside will now occur. I will show you guys. This, let's say, uptrend from here. All right? When it now got here, what happened? It broke down, it came down a little. All right? There was a pullback, then a break of structure to the downside. This confirmed the change of the trend. Now we are now in a bearish state. We are now in a bearish state. So that is how the signs you should watch out for when a trend is about to change from up to become from being bullish to become bearish. Another point is downtrend to uptrend. At a support level, watch out for a pullback. After a pullback, you will see a swing low and a break of structure to the upside. I will show you guys what I just explained now. This is a bearish trend. When the bearish trend ends, what happens? When the bearish trend ends, what happens? Look at this place. It pulled down. There's a break. There's a pullback. Then a little break of structure down to the downside. Then break of structure to the upside. Then market start doing like this. Then it continues to go higher. All right. So that is what I just explained to us. So it's very easy, guys. Then the third one is candlestick pattern. When this thing happens, what you should be looking out for is you wait for a specific patterns like rejection candle, pin bars, bullish, bearish engulfing, lower low, lower close candles, morning and evening start to form before you take your entry. This is a pin bar. After all this move, you see there's a pin bar here. If you did not enter from here, you move. This is an engulfing candle, or this place is is a pin bar too. If you have entered from here, you know that you have to put your stop loss below structure. You put your stop loss below structure. Even though there was a pullback, it will not stock you out. All right, the trade start to flow. It's like that, guys. Then another point is risk management. Ensure a minimum risk reward ratio of 1:1. If it's not up to 1:1, please don't take that trade. I have told us before, I don't want to dwell on that. And use your ATR for setting stop loss. Use your ATR. All right. You just come here, indicators, matrix, and strategies, type the ATRL. You see the ATRL as at that time you are trading because it changes. All right. Then lot size. Start with a smaller lot size and increase it as the trade moves in your direction. When you take a position, by the time, let's say for example, you have already made an entry here, and you now discover that price is going to your direction. What you need to do immediately, there's a pullback, add to your lot size. So don't just risk 1% completely or 2%. That is crazy at once because you have done your analysis, you are 100% sure that it's going bullish. No, don't do that. Start with smaller lot size as it move away to your direction of your analysis. When there's a pullback, add to your lot size. That is how to trade being smart and guide against your capital. Is very, very important. All right. Manage your trade. Be aware of market volatility and adjust your strategy accordingly. Know that in the financial world, Forex is a very volatile market. So be aware and know how to manage and adjust your strategy accordingly. Point number 7 is cut your losses early. If your analysis is wrong, cut your losses early and reposition. Once you notice that you have already take position and you discover that your analysis was wrong, don't just wait and say, okay, I've already placed a stop loss order, let it hit my stop loss. No, cut your losses early. Don't just stay there and be hoping. Like my friend will always say, traders hope they are hopeful when they are losing, they are fearful when they are winning, which is very wrong. All right. If you want to trade as a professional, cut your losses early. It's very important. After everything, do a back test. Perform daily or weekly back tests. All right. By so doing, you know where your strategy works and where it did not work. And you will now be able to point out what you need to adjust so that you can perfect your strategy. Stay updated. Or no, how do you stay updated? By you keep up with news event. Go to factory.com and always follow the calendar. The news that we have for the week, you know them. Please don't just read them and just like that. Go and research on them and know how they influence forex market. The last but not the least, patience pays the bills. Whatever you do, be very, very patient. Be very, very patient. That is a key to every successful trader. You wait for price action to get to you. Don't rush. Don't rush. Okay, wait patiently. Let price action come to you. By so doing, you will always win. Thank you guys so much for your support. Share my video, like my video, drop a comment. God bless you.